Hello, everyone. As Paul mentioned, I am new to the role as of about a week and a half ago. I think I got to meet a decent amount of people here at the BA Policy Summit last week. But prior to joining the Blockchain Association, I led U.S. policy at Uniswap Labs. So have been in and around the space for a while, but excited to have a little bit of a broader role now. And so in terms of market structure, I'm sure everyone has been just inundated with news reports over the past couple of weeks with different compromise documents being put out, different meetings happening. So happy to kind of walk through the latest. I think we'll start with, as we know, I guess we'll go back a couple weeks. So we had the Senate Banking Committee release their first draft of market structure on September 5th, but that was a Republican-only draft. And then we saw the Ag Committee a few weeks ago release their updated draft. That was bipartisan, but there were a lot of sections that were in brackets, which indicated that there were disagreement or still things that needed to be figured out. And as you all know, the eventual process will be once those bills pass out of those respective committees, they will have to be weld together and reconciled before going to the Senate floor for a vote. Banking has primarily been taking the lead as they have sections like AML and others that Ag doesn't necessarily have to deal with, and they're taking the lead there. So we've seen them kind of being the first to consider a markup and try to reach, a bipartisan product. And so the latest there is we saw, I believe it was last Tuesday, mid-holiday party for BA, the Republican compromise document that was sent over to the Democratic staff. And then we saw about 2 days later, the Democrats released their counterproposal. And essentially, I think the high level from the Democratic counterproposal that I think are issues that will be worked out over the next couple months. A lot of it revolves around DeFi treatment. The Democratic staff said they are looking at various requirements for front ends in the DeFi space, which is obviously in the current draft in Title 501. We don't have those sorts of requirements, and that would be something that would be concerning for the industry. They also are working on an AML section. We have yet to see any sort of text or detail there, but that's obviously something we want to keep an eye out for, as we're obviously all aligned on not allowing bad actors to use various crypto technology and platforms, but do not want to do so in a way that violates privacy or kind of hamstrings the innovation of the technology. And then obviously there's other outstanding issues such as the ethics question of what will be the compromise on language relating to the White House and administration's involvement in crypto activities. That's something that's a little bit outside of our control as a purely crypto policy perspective, but that is something that's going to be, I think, really important for Democrats to get on board and finding out a solution that is okay with Republicans in the White House as well. So those conversations have been continuing. And then there's also conversations around quorum. As you all know, we have Paul Atkins now at the SEC, who has been great, and now we will have Mike Selig at the CFTC, but we are still waiting to fill different commissioner seats at both agencies. And so there's discussion around something being included in regards to having a quorum of Democratic commissioners on both committees, especially the CFTC, where there's none right now, and we only have one commissioner in place, making sure that is settled before giving them more authority. So that's been another sticking point on the Democratic side. And so as a result of that counterproposal, the Senate Banking Committee created 4 bipartisan working groups. One is about Title I, so token classification. And I think Jill Brand's office has been a great leader on the Democratic side in ironing things out and getting to a compromise. 2 is the DeFi section. I think there's still a lot of work and education to be done there. And if anyone is interested in learning more, Brian and I have been deep in that for a long time. The third one being the ethics concern. And then last, which is what I will focus on and highlight a recent effort we've been working on, but relates to yield and the ability to offer rewards and incentives in the secondary markets and on third-party platforms in relation to stablecoins. So the Genius Act struck a very careful balance between not allowing issuers to offer yield, but allowing it in the secondary markets. And that was an intentional compromise. We had both crypto firms and banks in the room while that discussion was happening. And that was obviously the solution we all saw in the law that was, or in the bill that was passed into law. But we've started to see in the past couple months a big push from the banking lobby to add to one, I guess, on the regulatory side through Treasury rulemaking and requests for comment, push back on the interpretation of offering yield in the secondary markets. But then also, they've been lobbying heavily on the Hill, asking that members include an amendment to the market structure bill that would restrict the ability of people to offer any sorts of rewards or incentives on their platforms. And as a BA membership, it's something that a lot of our members are very concerned about. I think there's the immediate question of how does this impact stablecoin adoption, but I think more broadly, how does this impact crypto adoption? If we are not able to compete with, banks, we see this has been a normal market practice of offering different sorts of rewards and incentives to get people to move their money to the bank, use their credit cards, et cetera. People need an incentive to take the time and effort to move to a different system. And so, the banking strategy is if we're able to limit the ability of the crypto industry to do this, then we'll be able to limit their adoption. And so I think this has been framed in the past as something that primarily will affect, centralized exchanges, stable coins, but I think it's a broader issue than that. And for some of our members, it's a red line to supporting market structure. So to that end, we've put together and have worked with several members a letter that pushes back on this. And for a little bit of context on the Hill, not to get too much into the nitty-gritty there, but this is not a Republican-Democrat issue right now on Senate banking. It's on both sides. Republicans on the committee are getting inundated with banking lobby groups, banking trade associations, community banks, and the crypto industry, rightfully so, has been super focused on protecting DeFi, token classification, other huge questions that are outstanding in the bill. And so I think that Haggerty staff has been leading this effort and has been doing an amazing job, but I think it would be helpful to those who are working really hard to protect Genius as written, that we show strong support for that and show that it's not just a couple companies here and there that care about it, it's the broader industry. And even beyond crypto, it's a fintech problem as well. So we've been engaging with other financial technology trades and companies to get their support as well. We'd ideally love to have sign-ons by the end of the day today. There's a bipartisan meeting with the Senate Banking Committee members that Summer, BA CEO, and a couple of others will be at today, and she is going to flag that this letter is coming. And so we hope to get it out by the end of this week. And yeah, would love support. We're having trades on it as well as individual companies. So to the extent that people in this room are interested or know of people who would care and like to be a part of this effort, we would really appreciate it. And also, happy to answer any questions on the yield issue specifically, but also on the broader state of market structure and policy as well.
Thank you.